Hello students, today we are going to see the accounting for not-for-profit organization. Accounting for not-for-profit organization. Not-for-profit means generally the business organizations. Business means the economic activity which is started to earn the profit. But here some organizations they are establishing for the providing services. These type of organizations we are calling not-for-profit organizations or non-trading concern, or we can call it as a non-profit organizations. Here example we can see the trust or charitable trust or sports club, libraries. So these are example we can see the non-profit organizations. They are not earning the profit, they want to provide the services to the people. Okay. And in generally trading organizations, trading means where they want to earn the profit. So the trading organization they will prepare the cash book, profit and loss account, balance sheet. In generally cash book they will prepare, and in that they will find the balance carried down, and profit and loss account they will prepare. In that they will find out the net profit or net loss. Balance sheet they will find out. In that they will see the financial position. And here in the non-profit organization, these accountings, three types is there. First, in the place of cash book, they are preparing receipts and payment account. What? Receipts and payments. Receipts, receiving amounts, and paying amounts. Okay. So it is a non-profit organization. It has to run the organization. It has to provide services. It needs money. So that we are calling all receipts. Payments, it has to pay some for purchase or to pay the rent, salaries to the workers, something it has to pay. So the payments is there. Okay. And we have to prepare income and expenditure account. Income and expenditure account. So receipts and payment account is all receipts debit side, all payments credit side. Income and expenditure. From this receipts and payment account, we have to prepare the income and expenditure. All incomes are credit side, all expenditures are debit side. Okay. All incomes are credit side, all expenditures are debit side. From the receipts, we will prepare incomes. From the payments, we will write the expenditures. Okay. Now, in this income and expenditure, we have to find out the surplus, not net profit, surplus. Okay. Or deficit. Profit means surplus. Surplus. Amount which is in our hand. Next, balance sheet common we have to prepare. All assets, one side, all liabilities, another side. Okay. Next, in this receipts and payments, revenue receipts, revenue payments is there. Revenue receipts, revenue payments. Revenue means current year receipts, current year payments. We are calling revenue receipts, revenue payments. Or revenue incomes, revenue expenditure. Income and expenditures, present year means it is the revenue. It belongs to the further year, next year for a long period. That we are calling is a capital in nature. So capital expenditure, capital income we are calling. Okay. So now we'll see the one problem from the intermediate textbook, problem number 4. This is a simple problem. Okay. Fourth problem. So Kamaredi Youth Club gives you this receipts and payments accounts and other information. Okay. And requested you to prepare their income and expenditure account for the year ended 31st March 2019. So Kamaredi Youth Club is a non-trading concern. So they are giving the information of the receipts and payments. From that we have to prepare the income and expenditure account. So this is the receipts and payments. Here receipts, payments is there. So from this receipts and payments account, opening closing balances we should not take. Firstly, opening balance is there 22,800. We should not take the balances. Here we have to take only expenditures and incomes. Okay. Next item, 2 subscriptions is there. Subscriptions is a revenue item. Compulsory we have to take subscription. Okay. So when subscription is there, we have to see the in additional information, in adjustments, any information is there. Okay. So subscription is given as a 70,000. In outstanding subscription 31/3/2019 1500 is there. Outstanding we should add always. Subscription is an income and it is outstanding also is there, you should add it. So here income side by subscription 70,000 and plus outstanding 1500. And in the problem advance is there, received in advance, subscription received in advance. What you should do, minus advance 500 is there, 500 you should do minus. So 70,000 plus outstanding 1500, 71,500 minus advance 500, it is 71,000. Okay. Now donations received for mineral water. Mineral water means it is a specific donations. If in the adjustments anything he mentioned, we should see that point. If nothing is there, ignore the donations. Okay, donations are specific, general is there. General means we can take, but specific donations we should not take. Here specifically mineral water mentioned, so don't take. Next, sale of old furniture, sale of asset, sale of sale of asset, sale of purchase of asset we should not take. But from that sales we are getting profit or loss, we have to see. Okay. So see, in adjustment the value of old furniture sold is 45,000. Furniture value how much amma? 45,000. But the sales value is 42,000. Sales value is 42,000. Okay. Now come here. Loss on sale of furniture. Loss always expenditure side, debit side. To loss on sale of furniture, 45,000 value minus 42,000. How much difference? 3,000. So 3,000 is loss. Loss always debit. If profit means credit. Okay. Furniture value 45,000, but he sold only for 42,000. So 3,000 is a loss. Okay. Next, interest on investment. Receipt side is there. Interest on investment means it is a income. Income. So by interest on investment 10,200. Okay. Now come to the payments. All payments we should treat it as a expenditure except to the assets. See, salaries is there. So salary is a expenditure. So write down 2 salaries, 20,000 is given in the problem. Next, fixed deposit asset we should not take. Purchase of furniture we should not take, it is asset. And purchase of shares also asset, we should not take. Stationery and printing. So stationery is expenditure. Buy here stationery is in the payment side, so it is expenditure. To stationery and expenditure 20,000. Next, general expenses is a clearly expenditure. To general expenses 6,000. Okay. Now, so these are the transactions completed. Now we need to do the totals. We need to do the totals. Here, credit side total 71 plus 10, 81,200. So this side 81,200. So I am writing here using for working notes. Credit 81,200 and debit 20, 20, 40, 46, 49, 49,000 minus change 0, 0, 2, 11, 9, 11, 9 निकल जाए 2 and this from 7 you should do 4 minus 3. Okay. And this value we are calling is a surplus. Net profit and the surplus we are calling. How much? 32,200 is surplus. So now you add total, you will get the 81,200. Surplus means debit side we will get the answer. Deficit means credit side we will get the answer. When credit is incomes is more, it is surplus. Okay, here we should write income over expenditure. Incomes over expenditure. So this is our answer. So in the cash, in the hand, how much cash we have? 32,200. Like this, we have to solve the income and expenditure from the given details of the receipts and payments. Okay.